this in a sea of the dying and shameless.
Yeah, a lot of people do follow the yield inversion, and it's always has predicted between 6 and 18 months ahead there's going to be a recession. But I think we're in recession. If we actually had transparent, real figures, what is genuine growth, not created from fake units of currency, it's just a signal that it's going to get even worse.
Hey everyone, this is Robert Keynes with goldsilverpros.com. It is Friday, April 8th, 2022. I'm reaching you from Miami, where I was out at a speaker event last night and had a good time. I'm just working from a temporary office, and I'm joined by good friend Everard of Ark Silver to talk about the market and also talk about silver inventories, because I know that he works with a lot of the wholesalers and can give us some insight into that. Ian, how are you doing today?
Good, thank you, Rob. Yeah, it's good to see you.
Good to see you again. We've had a lot go on, so there's a lot to talk about here in terms of the market. I want to start off with some of the economic news that we've had over the last week. Of course, last Friday was non-farm payrolls. We came in at 407,000, which was below the expected 700,000 print. So not getting quite as many jobs as they would have expected, although it's still a pretty healthy number that was printed, 431,000 versus the expectation of 750. So jobs are being created, maybe not quite as fast. And you know, that to me says that we're not growing fast enough to keep up with the need, in particular for taxes and paying off interest on our debt, which is continuing to go up as the bond market, you know, the rates continue to surge forward. The other thing that happened, Ian, recently was we had the inversion of the yield curve, meaning 2-year bonds, higher yield than 10-year bonds, which is abnormal because typically higher yield for higher risk. And typically, Ian, you think 10 years is more risk because there's a lot more unknowns.
Absolutely.
And usually when the 2-year jumps above the 10-year, it's a signal of an oncoming recession.
Yeah.
I want to get your thoughts on that. What is it, you know, yield curve versus issues? What does that mean for the economy? Are we going to head into a recession, do you think? Or what are your thoughts on that?
I would say we're in a recession. And I would say we've been in a recession since 2008. So much of our GDP in America is government expenditure created out of nowhere by digital creation of units of currency. That's fake GDP. And the big problem we've got now, when approximately 50% of our GDP is government expenditure, we've just had huge misallocation of capital, resources, and labor. So it's worse than a normal recession because the deep damage is being done, I would say, over the last 14 years to the American economy. And it doesn't matter which political party has been in power, they're all guilty of continuing just ever increasing government expenditure. And yeah, a lot of people do follow the yield inversion, and it's always has predicted between 6 and 18 months ahead there's going to be a recession. But I think we're in recession. If we actually had transparent, real figures, what is genuine growth, not created from fake units of currency, it's just a signal that it's going to get even worse.
Yeah, the consumer credit has exploded. According to Market Watch, it grows the most in 20 years, which means when consumers are taking on additional credit, they don't have money. So basically savings are depleted. It was expected it'd only be 9 billion. It was a 42 billion print.
Yeah.
Highest in 20 years. I think the consumers are tapped out again. And I don't know if the government has issues with tax revenues and paying off the debt and running these deficits. The average person's not going to be able to save them at this point. It's not like we all have a big piggy bank where we've been sitting here all rich. You know, the average person is just barely, with inflation, it's just barely making ends meet.
Yeah, and we've had huge refinance and extraction of perceived wealth from personal property, personal real estate, and that's coming to an end. Now the Fed's not going to be buying any mortgage-backed securities, hence why the 30-year, I think I heard, is 5% now. So we've gone from 2.7 to 5%, not just because of the increase in the base rate, but because people who are issuing mortgages are thinking, I might have to honour this, I might have to hold this for 30 years. I can't sell it off to Fannie Mae or Freddie Mac or whatever ever crazy thing they create to purchase them. So that's huge, because pretty well that's going to put a full stop to people cashing out of their real estate. So already some of their perceived wealth is evaporating like the morning mist. And I keep talking to prospective clients who have millions in real estate, and they think they're wealthy and they think they're going to be fine forever. But there's going to come a point they might not be able to actually extract any of that to buy anything with. It will just be stuck. There may be a notional value, but no, they won't be able to refinance even at 5%.
Yeah, I think the biggest news from the Fed not being the largest buyer of the treasuries means that, like you said, the lenders know they can't just continue passing this off. Rates have risen. And if you're a real estate investor or you're counting on equity in your home to be your piggy bank, you may want to look at, okay, is this market sustainable? For example, in the last 3 years, property prices in my neck of the woods in North Texas have doubled. Now, that's the first time in my lifetime in over 40 years I've ever seen property prices double in 3 years in Texas.
Yeah.
We typically have not had that bubble like you've seen in California or the East Coast, Florida, those types of places. But that has firmly come to Texas. And, you know, if I went out and bought a house, you know, an average 3-bedroom, 2-bath house now for $400,000 where I live, that's 2.5 times what it was 5 to 6 years ago.
Yeah.
I run the prospect of being underwater, you know, like you buy a car and you didn't buy it at the right price and you're underwater on that. So when you go to refinance or get a new car, they have to roll in the overage that you have into your new contract. Well, that's going to happen in the housing market. It's going to be extremely painful for people.
Yeah. Yeah. I mean, when I started out buying property in 1984, so I was young. I was very young when I bought my first house. It was great when you could refinance, you could remortgage and just take cash out. It gives you the impression of you know, you're really creating a lot of wealth, but it comes to an end, and that effect has been huge in America. The amount of refinancing, and it's always been part of the bank's plan, because every time you refinance, it starts a clock. And you're just paying interest for the first few years of the loan. And that's what they want. They want you to be continually paying interest and continually owing a debt, because as long as you owe the debt, you're beholden to somebody. You're going to behave yourself. So they don't want people free and clear. So there's a mixed thing going on. I think some great fixed mortgage rate debt is great. I mean, anybody who's got 3% 30-year fixed, you're laughing, because you're going to, if they honour it, the dollars you pay back are just going to be meaningless.
That's exactly right. As long as you can make those payments and get back to consumer health. You know, I agree with you, but even some of these loans financed at 2 3/4, 2 5/8, whatever it is, it's possible people lose their jobs. I mean, if you talk about consumer not being healthy, you know, a couple of years ago, most consumers didn't have $400 in their bank account if they had an emergency.
Yeah.
Now they're tapped out and using credit. So it's more of, who do you pay? Do you pay off your house, or do you pay off your credit card? You know, somewhere in the banking system, we're going to start feeling these losses. And if we continue to have weaker than expected job growth, like I alluded to, that's not good, especially with the younger generation. The millennial generation, the Gen Zers, are facing a very grim prospect in terms of being able to pay for their student loan debt, which is why the government's talking about, the Biden administration's talking about extending forgiveness, because they can't pay. And if they can't pay, that is a visible default in the system to the tune of trillions of dollars, potentially trillions of dollars, certainly billions. Yeah. And now it's getting too big to ignore. You had it in student loans. You've now got it in credit cards. You're now starting to see it in the mortgage market. And not only that, but with the raising rates and the Fed not being, you know, lender of last resort for all this debt, essentially what you have happening is people aren't going to be refinancing to get you out. So if everybody heads for the exits in the housing market and tries to sell, you're not going to get your price, but you may not get it at all. People may not be able to get loans. So it's setting up a huge default scenario, I think, in the real estate market. It's
a complex mix. Yeah. And talking about student loans, it's ironic that is the US government's biggest asset. It's $1.5 trillion of student loans that are going to forgive. So, can you imagine a business just giving away its biggest asset? That's what they're talking about. So I don't know. I don't know if they are stupid or being paid off. I don't know. It's just bizarre that the poor level we have in government is yeah. I'm smiling, but it's tragic because it damages a nation. It really does.
It has. It's undermined our fiscal stability in transitioning to international. Ian, we were talking before the program about a lot of things that have happened since the last time we talked. Saudi Arabia doing trade for oil in yuan, so into the petrodollar, which is huge.
Yeah.
Russia pegging its ruble to gold. So let's talk about some of those things. What do you think some of these things, natural gas and oil for rubles and yuan, and Russia pegging their ruble to gold, what does that do for the petrodollar system, the strength of the US dollar and international markets?
Well, when it's not compulsory to use dollars, the value of the dollar is going to fall. And we might never even get to see Brent Johnson's dollar milkshake. I was sort of looking forward to that because I own in dollars. I don't leave in dollars for long. I was really looking forward to the dollar being doubling, trebling in its purchasing power. I might pop back to the UK and bought a house or two. But I don't think it's going to happen, Rob. I think poor old Brent Johnson's dollar milkshake is it's got a hole in the bottom of the cup and it's all leaked out.
I do see his point where the dollar is going to be the last of the fiat currencies.
Yeah,
I would say Western fiat currencies. I think any mistakes made in previous assumptions were on the previous world in which China and Russia weren't known to have large quantities of gold, hadn't built up their militaries, hadn't done the Belt and Road Initiative and all of these trade alliances and commodity alliances. But I think now you add in all those factors we've seen and have come to light in the last 5 to 6 years. And now I see a situation where the dollar may not be the strongest out of all world currencies. It may just be one of the strongest in the Western market. But the whole Western currency system could explode, and you could have China and Russia standing over here saying, we've got commodity access, we've got trade agreements in yuan and rubles, we've got oil, we've got natural gas, and we've got gold backing all of this. I could see it where it kind of splits, and you have a weakening of the Western currency system at the same time you have a strengthening of the Eastern currency system. Yeah.
Well, the dollar is only a derivative gold. That's all it ever. And at one time, it was exchangeable for foreign nations, and pre-1933, it was exchangeable for American citizens. You could take their $20 gold, their $20 note, and get a $20 gold piece. So, if it's a derivative of gold, which it is, all the other currencies that were based on the dollar are derivatives of the dollar, which are derivatives of gold. And I include crypto in that. Cryptos are derivatives of a dollar because it's priced in dollars. So the accounting comes when we have to prove how much gold we've got. And China and Russia states how much gold they've got. I mean, the ISO could do that, the International Standards Organization. I'm sure some independent body would be quite happy to get paid. Or even, one of the Price Waterhouse would probably go and do it for the Chinese, wouldn't they? They'll work for anybody for the right fee. So sooner or later, and I think it's going to be sooner, they're going to state their physical holdings of gold. And then we'll have to state our physical holdings of gold, which were last audited in 1953. I wonder why they only last audited it in 1953. I think they've leased it and it's been sold. And we haven't got the 8,000 something tons in physical gold. So we're in a lot of trouble. Western banking.
Yeah. I think to back that up, Greenspan did say that they stood ready to intervene in the gold markets and lease it out to support the dollar. Yes. And he said this decades ago. So to assume that they haven't done some of this. Now the question is, have they gotten it back? Nobody really knows the answer to this, but like you said, they haven't done an audit in 60-some years. Yeah. And as a former auditor, I can tell you, you can't year to year count on previous, even if you did a really solid audit and knew, 2021 where a company stood, years period of time is a big window for things to change very, very quickly. Yeah. And if they were even selling gold for a year out into the market, that would damage,
They've got form, haven't they? From what they supposedly did with the silver, the 2.5 billion ounces that were in the treasury. There were silver certificates that people held, and it was presumed that there was 2.5 billion ounces of silver in the US Treasury. And then World War II, the Manhattan Project, Congress signed that in secret they could take the silver out of the Treasury. The Treasury could still say they had the silver, and it was used to make the calotrons. And they were supposed to have been then turned back into bars, put back in the Treasury. But it doesn't seem like it ever was put back. So they've got form for blatantly lying and using Congress to lie, to say the Treasury has 2.5 or 2.4 billion ounces of silver when it didn't. So I've never seen anybody actually answer that question. Well, has the US Treasury got 2.4 billion ounces of silver?
Well, I think one of the clues there is when President Kennedy in one of his speeches says he wanted to renew the silver standard in terms of exchange for silver certificates. And of course, that never came to fruition. I don't think it was ever voted upon. I think he was going to try to do it through executive order. I don't know how much that would have actually, I'm always confused about executive orders aren't law, but they do facilitate executive action. So I don't know if that would have done it by itself. But in any case, it didn't happen. It was the late 60s. It never happened.
Yeah.
So to say now that we do have that silver, we do have that gold, I think, you have to take any claims that the government makes with a grain of salt. And let's go back to Russia pegging its ruble to gold for a minute. You were talking about how that may affect the value of the ruble and the value of gold in that market. Kind of walk us through what you think the effects are going to be of that.
Yeah, I mean, I don't fully understand all the minutiae of it, but they could easily back their ruble 1-for-1 with gold, 100%. And the last calculations I saw, that would put gold at around $2,000 an ounce. This was about 2 years ago I saw this. And people were comparing, and at that time, the US would have to have gold at $50,000 an ounce to back all of the... And that's not even all of the dollars, because we have this crazy complicated system of M0, M1, M2, M3, M4, and that's just a whole, that's obscured with the Fed changing how they've reported it. And they ceased reporting some, and they've moved some M2 into M1, and they just shuffle things around just to confuse. But to take it back to a real simple basis, I think we just individually need to continually be putting ourselves on a silver and gold standard whilst it's on sale. It's vastly underpriced for the units of currency that have been created, that huge debasement. And we have this window of opportunity, which is, it's frustrating with the retail premiums being pushed up so high. And I feel that's incredibly unfair. And I think that's part deliberate in the system. And with the whole COMEX system, retail can't go buy 5,000 ounces and collect it from COMEX. As you found out, it's not that easy. So now we're being hit with higher and higher premiums, but it's still incredibly on sale. And circling back to Putin, he knows that the Western financial system is bankrupt. His nation is not bankrupt. His nation is rich in resources, is rich in land. And as far as he's concerned, his population are dispensable. If they're not amenable to what he wants to do, they go off to Siberia, or worse.
Or just draft into the army like he did.
Yeah,
conscripted. 130,000 conscripts.
Yeah.
And I'm sure that was a completely fair draft too. I mean, they weren't, So tying this back to the consumer, and the reason I want to talk about both here is to make some ties. You mentioned putting ourselves in our own gold silver standard. It's blatantly obvious with the central bank buying since 2010.
Yeah.
With the way that China and gold had making overtures since 2009 about backing their currencies of gold silver, with Russia actually doing it and making non-dollar contracts, it's blatantly obvious that the rest of the world sees the weakness in the dollar system, and getting on your own gold silver standard can be a way in which you can flip the tables on what's coming for the dollar. We certainly think it's the dissolution of the current paper fiat system.
Yeah.
And if you think about it, if you're getting on gold silver now and you're on a fixed rate contract, going back to mortgages and credit card debt, that may be your savior.
Yeah.
So if you're not able to pay all that debt off, but you have gold silver, you have that reevaluation of gold silver in the international markets, which will not be controlled by the BIS, by the way.
Yeah.
People think that the BIS and IMF are all powerful. They're not necessarily. There are other markets out there in which you can price things. Now Shanghai is getting purposefully, and it's something I talked at Silver Symposium last year about. I gave a lecture on how China is building out the Shanghai to handle much more commodity trade. They're importing more companies. JP Morgan got involved in that very early on. So some what are considered Western banks are basically working with China to build their commodity sector up. So there's going to be alternative pricing mechanisms. And when that gold and silver resets, that may be the only way in which you can pay off some of those fixed rate contracts like credit card debt and mortgage and, keep your house and keep yourself solvent. Yeah. Because certainly if you're holding on to dollar derivative assets, it's going to be very difficult to do so. But if the rest of the world is saying, hey, the gold price needs to come up, the silver price needs to come up, and we're going to revalue those, and we have markets over here to do that, that may offer, an alternative pricing mechanism for the metals, and it may offer people a way to redeem their metals later on to survive, to pay for food that's going up, energy that's going up, to pay off their mortgage. And I don't suppose it would take that much. I mean, if gold goes from 2,000 an ounce to 10 or 15,000 an ounce in nominal dollar terms, meaning we're just now recognizing how many dollars have been printed and gold reflects that. I mean, it's a lot easier to pay off your mortgage. Yeah. Ian, isn't it that way?
Absolutely. I mean, this is what I came to realize way back in 2017. And that's what led me to start buying silver. So rather than, I got several interest-only mortgages in the UK, but rather than paying the capital down, I pay the interest. Well, the tenants pay the interest, and I've been buying silver, and I know that is going to be able to pay a lot more of the capital off the loans than if I just put that money into just reducing the capital. So yeah, is it guaranteed? I would argue it is. I think it's a certainty. Precious metals always give an accounting for debasement of currency. Every time, every I think we've had 4,000 fiat currencies in the history of banking. They've all reverted to zero. Whereas if you'd bought gold with them before they reverted to zero, your gold or your silver is more than maintained the purchasing power. And there's a tipping point where the actual real value of your debt is falling rapidly as the dollar dies, or your pound dies, or your euro dies. And at the same time, your gold and silver is skyrocketing as it's taken into account the debasement. So it's going to be a large window of opportunity to pay off a huge, if you have debts or loans, and to secure your home.
Yeah, I agree with you. That was the thesis I came up with probably 10 or 12 years ago when I started writing about this for Seeking Alpha and Yahoo Finance and all these sites, and why I started Gold Silver Pros. Just because I understand the value that gold silver are going to have. It's such a unique investment proposition that's been around for so long that I don't think a lot of the younger generations understand. Certainly they're going to other things like crypto, which is fine if that's what you want to do. But I think that the value proposition of gold silver is still there. People that say it's a barbarous relic simply need to look at the policy being put out by the BIS, in terms of Basel III and how they value gold. Need to look at the central bank buying, the commercial bank intervention into the markets to take the physical off while they short the price and take it off cheaply. Simply need to look at Russia pegging its ruble to gold. Why gold? Why not Bitcoin? Not disparaging Bitcoin, but there's a reason why they're doing it in gold. There's historical precedent for that. Yeah. So I do think commodity money is still, to this day, even despite the advancements in other types of currency, still to this day, the bedrock of a healthy financial system. It would not surprise me if we get into a conflict with China over Taiwan or something like that they do the same thing with gold in their currency. It would not surprise me at all. And I think you can get into other things. You can be into stocks and real estate and crypto, and that's okay if you want to speculate in this. But I think gold and silver still have their place. The commodity money still has its place. Yeah. And that's why we like to talk about it, because there's so few people that understand. And if you're one of those people that understand and you get into it, your pricing power compared to the rest of the market is going to be just so immense, Ian. Yeah. It really allows you to have so much more flexibility having that versus the market, which doesn't have, those types of assets. Yeah,
I mean, zero counterparty risk. You're not relying on anybody else to do anything, or a whole chain of other people and entities to do stuff which are currency. Anything, whatever it is, you're relying on other people to function and do what they're supposed to do. And sort of going back to what you said about the BIS making gold a tier 1 asset, Well, the only other tier one asset at the moment is US debt. That's not going to be tier one for long. So what does that leave? That will leave gold as the only one tier one asset. It's not by accident the BIS have put that into place, because you can bet your bottom dollar that all the people in the BIS have a lot of gold personally. I mean, heck, the headquarters is in Basel, Switzerland. All right, that's where probably half of the whole of all the gold in the world is in the Swiss mountains in private vaults. Most of it,
they know this is how the system works. You look back at World War II and Hitler taking everybody's gold. He would go into countries and take their gold first. And stockpile the gold because that's how they funded their war machine. But also a lot of the people, in that regime were taking gold. It was gold first, and then it was other things like artwork and real estate. But gold was always the number one thing that they took, because they understood the tremendous value that it had.
And it was the first thing that Hitler made illegal for Germans to own personally. And I think Stalin or Lenin, they did the same. They made it illegal for their citizens to own it. Because it's private. Well, and amazingly, I don't understand why in America, where there's nothing that is private anymore. I mean, people think their crypto is private. Well, they're deluded. It is not private. Every transaction is recorded.
It's on the chain,
Sooner or later.
So it's
sooner or later somebody can access it.
You can put it on a private, like a little private
hardware
device,
wallet.
But to get it into the system to trade it, you got to go to one of these exchanges, and so then it becomes registered. So that's fine if that's what you want to do. You can do private exchanges, on Lightning Network, but to actually be able to spend it and to have those transactions validated, it has to go on the public chain. And MIT did a paper a couple of years ago that said that there's zero privacy in this, because once it gets on the chain and you're on and off ramping it through the banking system, they know who you are, which is fine. Again, not a criticism of Bitcoin or the cryptos, but because people use them. I have a friend that uses it to send money to his family in the Philippines, and it's cheaper than sending wires. And great for him, great that he can do that. So I've got no problem with that. But you're right, Ian, it's not private. In that, when you have to go to the market, you have to announce who you are. That's the way the blockchain works. It's not a private transaction.
And for some reason, gold and silver, platinum, and precious metal purchases are non-reportable. And I can't think. I mean, maybe one of our viewers will tell us. I can't think of any other transaction that you do that is non-reportable. You buy a car, everybody knows about it. Your pension, and the whole American.
Because it's money, and money shouldn't be reportable as an asset. A lot of states have backed that up by removing sales taxes and said, yes, you can exchange gold and silver you can use it to pay off. The big thing is when they say you can use it to pay taxes, because then it's recognized as money. And that has been done in a couple of states, not all, but a lot of them removing transaction costs from gold and silver is recognizing it as money and not as an asset. And so it should then remove it from the conversation of capital gains, even though the IRS, I think, differs in opinion from some of the states. And I see that a big battle coming between the states and the federal on is gold truly money, or is it an asset? I think a lot of the states are moving towards its money. Texas, Tennessee, Nevada, Utah, those kind of states are basically saying, hey, we see gold as money. And I think they see, the state level says, instead of using the devaluating federal dollar, we need something else to help backstop our finances. And I think that's why you've seen these states step up and really emphasize gold in their systems. But there's a battle coming, because the IRS and the feds aren't going to like that. And so I see this probably going to the Supreme Court at some point about states' rights and money versus the federal.
Maybe things will develop a bit quicker, Rob, because if the dollar carries on losing value at 15, 20%, how are they going to pay the people that work for the IRS?
Or the military, or
what are they going to pay them with?
Mechanism, right?
Are they going to pay them with
gold and silver or Bitcoin?
What are they going to pay them with the SNAP program? And are they going to pay their mortgages for them? Are they going to provide them housing? Are they going to give them gas, give them a car when the dollar really just won't buy it anymore? And we know inflation is high. And I think I remember you asked me last year a prediction of inflation, and I said 25% Q1. And it's like, well, interestingly, I just read in the Wall Street Journal that a significant proportion of CEOs of the S&P 500 companies, guess what their pay rise was? 25%.
And they're reporting higher input costs than what the inflation rate is. They're saying it's more 15 to 20%.
Yeah.
So
we're getting close. We're getting close to the 20s now in actual what we have to buy.
Real world inflation. Things that we have to buy that are inputs into making products are sitting between 15 and 20. And if you look at shadow stats that use 80s methodologies, very straightforward methodology, it's around 15.
Yeah.
So,
and the Chapwood Index independently with the 50
Chapwood
cities.
Index,
So
let's talk about silver deals. You're, silver dealer. The great thing about you is you offer it to people probably cheaper than anybody else. The way that you operate, you don't have as many costs in your system. You're very efficient, and you're able to get good deals. And instead of offering a full slate of products and having very expensive premiums like everybody else, what you look for are ways in which you can pass savings on available silver in the market to people. So talk about some deals that you may have. Yeah,
we're still doing the big 1,000-ounce bars. Very volatile the premiums, so they change hour by hour. Can get as low as 99 cents still, but sometimes it's a fair bit higher. And still have the famous 40% Kennedy halves. The premium has gone up to 129, but still incredibly cheap. And that's per ounce of silver.
That's 129 per ounce of silver, and I challenge you to find any ounce of silver that you can get for $1.29. In small size. Forget the 1,000-ounce bars for a minute. And that the average person could afford. You're not going to find that anywhere else.
Yeah, and it's great because you get 7 of these as just over an ounce of silver, so it's 1/7 of an ounce of silver.
And if we go to commodity money, there's two advantages to using U.S. minted coins. Yeah. People are going to recognize them. And you have smaller denominations. You can trade it for a loaf of bread.
Yeah, and there's hundreds of thousands of copies of the Red Book, the coin book that's printed every year. And so it's common knowledge and printed common knowledge. You haven't got to rely on anything electronic to prove what it is. You can buy your copy of your Red Book now when you buy your coins, and you can show people, look, this is what it is, and this is how much silver it's got, and how much copper, how much manganese. And then I've just started doing the war nickels. So they're a bit dirty, but they're pretty good shape. 1942.
So during World War II, the story is that nickel was so valuable that they substituted silver back when we could do that. So the war nickels actually have silver in them instead of nickel. Yeah,
they're 35% silver. So 20 war nickels have 1 1/8 of an ounce of silver in them. And then 56% is copper, and the other 9% is manganese. And you get that metal for free. So I think at some point in time, people will be smelting them down to extract the copper and the manganese.
The copper for sure. Yeah.
Well, and the manganese is a crucial metal for a lot of alloys. So we're doing those at around 250 premium per ounce. So I think they're a great deal. And then still getting the kilos. So Valcambes or
I think I sold you some kilos for your inventory, Ian. So.
Yeah, I think that could be one of yours, Rob. You can check the number, see if you recognise that. And then I did get a few of these beautiful Germania 1 kilos. So
those are gorgeous.
And they have like a hologram.
There's nothing, Ian. There is nothing like holding a kilo silver bar in your hand. Like even more than gold.
I don't know. The 100. The 100's nice.
No, the kilo to me is perfect. Yeah, it's not too big. It's not too small. And I enjoy holding that more than I do even my gold coins. There's something about that kilo bar of silver. I'm like, wow, this is, it feels natural. Yeah.
And at the moment, it's equivalent to the 100-ounce bar, the price per ounce. So a smaller denomination for the same rate.
That's the key for savers who are just putting a little weight every month. Yeah. Some people can't do the $1 million order, the $100,000 order. But they could do, a few $100s a month or every 6 weeks, and that's key. And those bars are great because they're going to be recognized and very easy to move. If you go to your local coin dealer, 3 years from now, you're going to be able to move those bars pretty easily.
Yeah, absolutely. And then the 1-ounce coins, the premiums have just blown out. I mean, American Silver Eagles, $15. It's just ridiculous. So I will reluctantly sell some, but it won't be $15. I'll probably charge about $12 premium on Eagles. We have some 2020 Britannias come in.
Very beautiful.
They're the least expensive government coin at the moment.
Mm-hmm.
And then I did get a fair
And those
batch.
are a British coin, right, Ian?
Yes, British coin, but
Britannia.
Sunshine Mint makes the blanks for them.
Really? Did they?
Yeah.
Okay.
Yes.
Well, good for Sunshine Mint.
And then we did manage, thanks to Bob Coleman, he sourced me some Armenian Noah's Arks, which are even better value than the government coins at the moment. So,
And is it goldsilvervault.com for Bob Coleman?
yes, yeah.
We'll give him a little bit of free advertising. I have stored some stuff with him, stand-up guy, so goldsilvervault.com.
Yeah.
All right, Ian, so we're going to say how you can get these deals. If they go to you and mention Gold Silver Pros, they'll get the deals. If they go to our website and click on Precious Metals Deals and fill out the form, it'll email you and us, and we'll track it, make sure they get their metals. And so far, you've been doing a bang-up job for us. A lot of customers have come through, and we appreciate you helping out. The main thing that when I bring an affiliate on, I want to make sure that they're providing service, number one, and also value to the people that follow the program. And you guys have done a great job so far. I've heard nothing but good stuff.
Thank you, Rob.
Well, I think that's going to wrap it up for this one. It's about 35 minutes. I think that's long enough. We'll have Ian back on every couple of weeks to talk about inventories, to talk about what's going on in the world, and to offer good precious metals deals, because at the end of the day, if you're stacking, that's what it's all about. So, Ian, thank you so much for joining the program. We appreciate you.
Thank you, Rob.